climate change could potentially derail the Asian century that everybody talks about, as global warming is expected to surpass and go beyond the 1.5 degrees Celsius. So of course, it is a horror scenario, and it could also really impact the Asian economies, which are so vibrant, and the huge population, of course, there as well. So what can not just governments, but also financial institutions and big business really do to curb the carbon emissions? Why do they play such a crucial role in climate action, and how can and should financial institutions move away from the old coal that they still use sometimes to invest in? And where do Europe's biggest financial institutions stand in climate action? These are some of the burning questions we want to answer right here, right now. And without further ado, it is my great pleasure now to introduce our speaker today, Chen. She's the Manager of International Energy Policy at the Natural Resources Defense Council, NRDC, based here in Zurich as well.
Thank you, Martina, and thank you very much for moderating this conversation, and to Asia Society for organizing this. And of course, sorry we couldn't do this in person, as I think it's a discussion that would be benefit from a lively chat. So first, I think I'll just sort of talk about the general situation with investments in Asia, especially looking at energy. So as many of you know, Asia is one of the fastest growing in terms of energy demand. In terms of annual growth in energy and electricity demand, it's about 6%, which is much higher than most regions. I think global average is probably much closer to 2 or 3 for a lot of other economies. So we're seeing in Asia, and especially in Southeast Asia, large populations, huge demand for energy, everything from refrigerators to air conditioning, especially as things heat up quite a bit from climate change, in fact. And so thinking about how are these fast growing regions that are relying on new energy investments, how are they going to help or hurt our ability to meet the Paris Agreement and limit climate change? It's really about what choices they're making in terms of investments and infrastructure. And who pays for all of that? Really, it's a broad financial system that includes a lot of government investment in these countries, but it's also about the private sector investments from within Asia, but also from outside of Asia into these infrastructure projects. So we've seen, in the last few months, wildfires all over Australia, intense flooding events in Asia. They cost tens of billions of dollars when these events happen. And the prediction is that if nothing is done, then there's going to be a 1% drop in global GDP just from the extreme weather events alone. And then there's a lot of other types of impacts that will have a dollar cost as well. So if we know the cost of doing nothing is actually really high now, then I think that's why there's been a lot of pressure on financial institutions, both within Asia and outside, to align these investments with Paris, because in the Paris Agreement itself, Article 2.1c, and I won't get into anything more weedy than this, the actual article says that it's a requirement for the governments who signed on to align finance flows with the Paris Agreement. It doesn't say whether it's public investments or private investments, it's really everything. And so we can expect governments not only to invest their own bilateral aid and export credits in certain ways in Asia, and we can expect that there's going to be regulation on a lot of the private sector financial investment as well, if governments are very serious about aligning with Paris and about lowering emissions. So for a lot of financial institutions, including in Europe and the US, but increasingly in Asia as well, we're seeing a lot of different types of institutions sign up for net zero commitments. And so what exactly does that mean? That means by around 2050, for most of these commitments, we're not going to have any more emissions financed by the projects these companies finance. There's a net there because there's a small amount of things which might be offset, where you have to subtract those emissions and pay for more forestry programs, things of that sort, but that's really a small percentage. but really we're getting the entire world to practically zero emissions by 2050. And that's only 3 decades away, which is about the lifespan of the infrastructure projects that are being decided on today.
If I may just follow up briefly, we'll also get to the announcements that came out recently by China and Japan regarding the net zero targets and so on. Just quickly on this shared responsibility between governments and companies, business. Do you think it's 50-50 to bring us to a net zero world and reach the Paris Agreement? Or do you think one actor is more important than the other? And how should governments and the private sector be working together more?
Well, I think that right now we need a lot more of these commitments from companies themselves, because it can take quite a while for the governments to figure out how to regulate in terms of the technical details around what emissions are associated with each of the projects. And I mean, as we've seen with trying to regulate the technology sector, there might be a bit of a lag in terms of the intergenerational differences and understanding some of these technologies. And so I think that governments are really ahead in some places. For example, in the UK, they're talking a lot more about these climate risk issues, whereas in other places, it's still newer to the agenda. But even in a place like the Philippines, where they've been developing a number of coal plants, the regulators just this week announced they don't plan to build more new projects because they've seen that there's a huge stranded asset risk in the Philippines, because these companies were building it and not really thinking about whether there'd be demand for the projects down the road.
A story that I read recently in The Diplomat, entitled "Will Climate Change Derail the Asian Century?" wrote that climate change could bring an untimely end to the success story of the rising Asia. Would you agree with that? What is your view? How serious is it?
I mean, I think the risk for Asia is quite high in terms of climate. That's why the Asian Development Bank put out a report about 2-3 years ago looking at all of the costs from climate. Asia has a lot more low-lying areas that are going to be susceptible to flooding events and to sea level rise. So if you looked at the report from Asia Development Bank, and frankly a lot of other reports looking at this, the storm surges and the flooding events, the highest risks are really in Asia, in China, in India, Bangladesh, Indonesia, these huge countries where tens of millions of people in each of the cities is going to be affected, and potentially a lot of relocation is going to be needed. So if you look at the 10 cities with the sort of greatest risk of losses from the damages, the biggest ones are going to be Guangzhou in China, Mumbai in India, Shenzhen also in China, Ho Chi Minh City in Vietnam, Jakarta in Indonesia, Chennai also in India, Bangkok, Nagoya in Japan. We're talking about events that have already started happening and had huge costs in terms of damages and insurance. And looking forward, the situation is not improving as rapidly as we'd like. 2020 was supposed to be the year we really decreased emissions and put it on a pathway permanently to be lower. And so the emissions now are lower due to COVID, which is not the ideal situation. And in the future, unfortunately, they'll bounce back unless governments and banks and everyone else really changes around the types of investments they're approving in the next few months.
Do you actually think that COVID-19 could be a blessing in disguise when it comes to, cutting carbon emissions? To which extent do you think, especially because we are not flying right now, right? And IATA based in Geneva is like sending out warning messages that more airlines are going to go bust and so on, and the travel industry is really suffering. Do you think that this could actually limit some of the impacts?
I think that over the long term, we're still going to see projections for an increase in emissions after this period. So I think what the COVID situation actually teaches us is more about this planning for the long term. I think generally a lot of institutions, private and public sector, aren't ready and prepared for that multi-decade plan, looking at the stranded asset risk for all of these investments. And just looking at the example of not being prepared for some of the healthcare needs that have arisen, thinking about how unprepared governments are about how quickly they might need to retire coal plants early in order to meet the goals, or how to plan for building higher bridges and roads, all of these types of investment decisions. It's really about, I think the lesson from the COVID situation is about this long-term planning of knowing there's really no reason to be investing in a lot of these things. The UN Environment Program report said current investment into fossil fuels around the world is actually already surpassing what we need or what we can accept for the Paris Agreement and the 1.5 degree goal. So if you're looking at projects to approve and you're still trying to approve new oil and gas development or new coal mines, or even refinance some of the old ones, I think it'd be really hard for anyone who is trying to make forward-looking investment decisions to say that they didn't know that these were going to be a huge risk in the future. And I mean, we can talk about sort of China, Japan, and Korea, all of these net zero announcements and what they sort of mean for those investments, but really it's a huge risk to not rethink some of those investments, because energy is really the biggest part of global carbon emissions.
So let's take a look a bit and focus, zoom in on these investments in the energy space. Let's talk about the profile of investors. Are these insurers, pension funds, other big investors, and what kind of investments do they do? Is it mostly green bonds and so on? Can you give us a little bit of a breakdown and overview of these green investments?
Sure. And I think that's a really important distinction that you made. There's a huge range of green investments. There's, green bonds, there's ESG funds. So on the clean energy side and the green side, to align with the Paris Agreement, there's a lot of things we need to invest more in, energy efficiency, renewables. So the bonds, like for example, in India, you've got a massive and growing market. China and India are really the largest emerging markets for green bonds. And India last year, it was about $3 billion worth of those. So there's a huge market for the clean stuff. And you can see in India, those projects for solar plus storage and things are actually often cheaper than new coal plants in the country now. So they're really going head to head on the competition for what kind of clean energy future the country might have. In terms of looking at it more broadly, I think if you look at Asia, a lot of the financial institutions sometimes consider themselves more followers than leaders. So as European and American institutions have moved out of coal, and a lot of institutions have put in place exclusion policies, Japan has sort of come along, Korea's coming along, and then with China, I think there's still there's a lack of transparency about how much risk is still in those portfolios. But in terms of the types of investments we're talking about, there's a lot of different projects. So a lot of it goes back to these very specific infrastructure projects. But from those, you have the banks involved in financing those through the loans. And then you have the insurers who have to provide insurance for the projects, and quite frankly, a lot of the risks and growing risks that are now attached to them. Especially with COVID and a lot of delays in projects and things of that nature. And then farther back from that, you have a lot of movement in terms of investment funds, pensions, private equity, rethinking whether or not they put their money into these projects as well. So they'll be investing sort of at the broader level. And then at the project level, I can give some concrete examples of the types of things we're talking about. So for example, in Australia, we have the Adani coal mine. It's been a hugely controversial project. Groups in Australia have been fighting it for a number of years, and they've actually had Chinese banks, Korean banks, and others openly say that they won't be providing funds for this project. And you've had insurers say the same thing, that they'll refuse to insure this project. At the broader level, the National Australian Bank has also made a number of commitments on getting out of coal, oil, and gas. Some of them have weaker commitments getting out of only Arctic oil, for example. But the real challenge is getting all of these financial institutions to have policies that truly align with Paris. So if you just say, oh, we're out of some projects in this region or that region, it's really not the full picture. And one other quick example is just yesterday, Samsung's construction and trade business announced that they were going to exit the coal market. So they've been under pressure from a number of groups, including ourselves, to get out of doing new coal projects. And they realized that, you know, there's not a lot of profitability to be made in some of these very high risk projects. The plant that they're planning to build is in Vietnam. It's the Vong Ang 2 project. And Chinese investors have dropped out of the project. The company GE in the US has dropped out. And yet, because there was a lot of Korean involvement in this project, the government from Korea stepped in and supported it because of, you know, sort of trade and export promotion. Now, at the end of the day, I don't know that this project will likely go forward given all of this opposition, but this is just some of the examples around, you know, insurers, financiers, pension funds are all trying to get out of these projects. In fact, I think pension funds and other investors worth about 5 trillion actually went to Samsung and told them, we don't want you to be doing this project. And that's part of why Samsung is announcing they're getting out of coal. Unfortunately, they're saying that this project is already, you know, in the pipeline and they can't stop it, which frankly is untrue since they just picked up the project about a month or two ago from GE. So these are the types of dynamics that we're seeing on the financial side. And there's a list if people want to see it on the IEFA website, and I'm happy to share if people contact me, that lists over 24 institutions across Asia that have announced some of these restrictive policies on coal, oil, and gas.
And it's great to see that some of your advocacy work is already showing results as well. Let's talk about Europe here as well. Han and the Swiss banks, for example, as well, have been really late in kind of exiting coal investments, UBS, Credit Suisse, and so on. We don't need to do any finger pointing here, but where do you see your work as an advocate for, you know, shifting these investments into the more greener space? Where do you see the best results? Where can you actually have some impact? And where do you see the European players in terms of their shift towards greener investments?
I think that's a great question about the Swiss institutions. I was looking through the list of new infrastructure investments in Asia that's been approved this year, and there's quite a number that involve these Swiss banks and other, you know, entities in Asia. There's support for new LNG projects, coal refinancing. So I think really it's very important that we do all of the clean energy investment and accelerate those positive trends. But I think what's still missing is really this conversation about the phase out dates for coal. So I think insurers and banks have said, okay, by 2050, we'll be at zero. But for the next 3 decades, that's a long time to not have a more clear phase out plan. So I think the phase out trajectory from these companies is a very important part. I think on the other hand, regulation is also important. If a lot of these institutions won't do this type of work domestically, I do think governments need to step in and make a very clear phase out plan. And so I think that's, you know, 2 separate things and 2 separate realms of activity. You have the government regulators focused more, I think, on that domestic investment piece. I think the hard part is when you have these transnational deals between these countries, it's very hard for regulators in each country to have the jurisdiction on it, right? So I think it's easy to say, okay, Switzerland's going to clean up, it's going to be net zero. Zurich will be, you know, net zero by 2030, I think is the current commitment here. But when you look at overseas investments, it is very important to have more oversight over that. In fact, with China and the Belt and Road Initiative, you know, because those are a lot of state-owned enterprises, there is really a role for government in regulating what kinds of things they invest in. And there's a lot of European and American companies and investors who are part of those Belt and Road investments. So I do think it's important that regulators think about and start making policy that affects those things as well, including, you know, from the US side, there's been legislation that says American companies and, you know, those working with others on the Belt and Road on high carbon projects are going to be at risk of sanctions through the investors on the Asian side. if it's shown that those projects are kicking out better alternatives and renewables and they're high carbon. So I do think that both of those things are very important, private sector and public sector progress.
Let's talk about the two massive announcements by Japan and China regarding the net zero carbon commitment by 2050 for Japan, 2060 by China. You mentioned before that these countries in Asia, governments in Asia have been rather followers than leaders, but do you think that now they can become game changers, especially maybe after the US elections on November 3, because the US position, we all know, on the Paris Agreement has been rather negative?
That is very correct. So I think that will also depend on what happens November 3rd. But at the end of the day, the US is not the lead in terms of overall clean energy investment anymore. As you said, China has been the lead in terms of installing more wind and solar for the last few years. So I think that's a huge change. You have China stepping out ahead, not waiting for the US, not announcing with the EU that it's going to go carbon neutral, but going out on its own and saying, this is what we're ready for. And if you look at that type of announcement, China's saying by 2050, we will use 96% less coal, right? That's a huge drop. We'll use 75% less gas and 65% less oil. So what does that mean today? It means huge infrastructure changes in terms of electrifying so that you can have more electric vehicles, changing the electricity system to favor renewables even more than is currently happening now. And these are massive shifts in investment that, even a few months ago weren't predicted. And so if you look at what's going to happen with the 5-year plan for China, I think decisions are going to be delayed about the targets for energy for the 5-year plan because this announcement came out from President Xi. It's now with the ministries to figure out, how do we implement this? What does this mean for investments? Do we still go forward with all of these coal plants, or do we shift to even more renewable energy investment? And I think there's a strong lobby in support of that renewables piece, but there's still a strong lobby to keep things as they are. And so that's really a big tug of war happening. And as you said, Japan also has announced they're going carbon neutral, but because they now see that economic opportunity, for many years they said, we're going to be doing just coal and carbon capture and gas because that's where their sort of niche is. And all of a sudden you have this massive change coming, I think, probably with some pressure from that announcement from China. And so you have a month ago China, a week ago Japan, and then just yesterday or today, you had South Korea say they're also going to go carbon neutral. So you've got 3 of the biggest energy consumers in Asia and making this announcement. And then the question is, what does that mean for the rest of Asia? Does that mean they're also going to feel pressure to commit to these targets, which then changes the kind of investments they'll approve in the next few years? Or does that mean, more of those high emitting projects go to Southeast Asia and other countries in Africa and elsewhere because there's less regulation on those things in those markets? And that's an open question. I think it can be up for discussion.
Let's hope there will be a massive domino effect across Asia and all countries comply to these new targets set by Japan and China as well.